Hello and welcome to Gold and Silver Assets. It's Sunday the 7th of June 2020. So today's talk is going to be about the horrors of hyperinflation. Now the reason that I wanted to talk about this is that most of us aren't old enough to have even experienced any particular period of significant inflation. Let alone hyperinflation. And I've always been curious to know what it's actually like at the ground level for people. So I've recently finished reading this book called When Money Dies by Adam Fergusson. Now, I found this quite a tough read. There's a lot of detail about economics and politics, and it basically covers the nightmare of the Weimar hyperinflation. The thing that I found really interesting about this book, though, were all the little stories about what day-to-day experiences were of the general public. And so what I've done here is summarise some of the themes that came across from that. So the first thing was that between 1914 and 1920, the cost of living increased 9 times. And this really went over the cliff edge in 1923. Now, the natural reaction to this was to assume that goods were becoming more expensive in absolute terms, not that their money was depreciating or losing its purchasing power. People also assumed that foreign currencies such as the US dollar were unfairly rising and therefore pushing up the prices of everyday goods. But in actual reality, it was the US dollar that was stable and it was the local currency that was falling. People therefore misunderstood the underlying cause of what was happening to them. And so at the day-to-day level, things like restaurants' meals ended up costing more when the bill came compared to when they first ordered it. And of course, when you're talking about millions of marks to buy a loaf of bread, it basically meant that when someone went to the shop to make an ordinary purchase, it took about 3 or 4 minutes of calculation just to work out how much was owed, and then several more minutes just to count out the notes for the payment. And yet people still didn't understand what was going on. So one man recounted, "My relations and friends were too stupid. They didn't understand what inflation meant, and they didn't rush to get rid of their cash either. They all thought it would all stop within the next week or so, and they kept thinking it's going to end soon, it's going to end soon, but it didn't." And at that time, it was the people who had foreign currencies that did very well. So there was an example of one man who found himself with a single US dollar bill in 1923. And so he went to Berlin one evening with 6 friends and he was determined to blow the lot. So they all went to dinner and lots of nightclubs. And at the end of the evening, they still had change left over. There is also stories of foreign students who bought up whole rows of houses out of their allowances. Another theme that came out from this book was that it was the middle classes that were the hardest hit. It was a form of lingering and intense torture that inflation inflicted on them. And one area that was particularly hit was their investments. And so this was highlighted by the story of Frau Eisenmenger from Austria. Now, of course, Austria also went through a significant inflationary period at the same time. So she had an investment in 1914, which gave her an income of 5,000 kronen a year. In 1918, she decided to cash in 20,000 kronen. So she went to her bank manager and he actually urged her to convert that kronen into Swiss francs at the time. But she declined as private dealing in foreign currencies was illegal around then. Unfortunately, the kronen was losing its value rapidly, and by December 2018, so remember that's only 2 months later, when she visited the bank, the manager said, "If you had bought Swiss francs like I'd suggested, you would not have lost 3/4 of your fortune." She replied, "Lost? Don't you think that the krona will recover again? Surely nothing safer than government securities." Anyway, later she was persuaded to change what was remaining of her money into industrial stocks. In November 1919, her stocks were going up really well, but this seemed incomprehensible to her, and it made her feel uneasy. At the time, it was quoted that speculation on the stock market has spread to all ranks of the population, and industrial stocks rise like air balloons to limitless heights. However, Frau Eisenmenger noted that in real terms, the income from her burgeoning shares was actually diminishing. So, although the stock market was constantly rising, middle-class investments were actually diminishing in value when priced in foreign currencies. And insurance policies were actually worth less than the premiums that they'd paid. As an example of just how far the share prices had fallen in real terms, if we look at the period from 1913 to 1921, the real prices of stocks had actually decreased to 1/5 of their value, and by the time they reached October 1922, it was 3/100ths of its value. Also, dividend yields were decreasing. So at the time, the average dividend yield was 0.25%. And by comparison, gold over that time had risen by 143 times. The other thing to note that although the stock market was increasing in nominal terms, there were times when there was currency stability for short periods, the stock market actually dropped in nominal terms as well. So overall, the middle class literally became destitute, and this was due to loss of paper savings, and then they ended up having to sell their valued possessions just to survive. Landlords were also not much better off because the governments instituted rent restrictions, and some of the landlords actually had to sell their properties at knockdown prices. The other thing that happened around that time was that it was the government that decided who would fill an empty tenancy, not the landlords. So there was a lot of control over rental properties at that time. Also, people who were beneficiaries of the state and state pensions, their income was decreased because although the nominal amount that they were paid was increasing, the purchasing power continued to decrease. As a result of this, there was a constant demand for higher wages, but it just never really kept up with the increases in the prices. And so as a result, there was ever increasing pressure on the banks to keep printing more currency. So as the mark fell, there was pressure to increase nominal wages, and as a result of that, the taxation laws never really kept up with that, and so people were ended up paying greater proportion of taxes. There were also variations in the job market. So the young and the active were able to find work, but then the older people were destitute. The professional classes didn't get away, so doctors and lawyers suffered a shortage of clients. Bureaucrats and clerks found that their salaries were actually shrinking. But it was actually the countryside landowners and farmers that were less affected because they could produce most of their own essentials. So as the hyperinflation progressed, there began a mania of purchasing. There were queues and queues outside shops, and these queues were from foreigners who wanted to buy because things seemed quite cheap to them in their currency. But also there were locals queuing because they feared further price rises in the future, so they wanted to buy now. So the feeling at the time was that to save was folly. So people wanted to buy assets that would maintain their value, and therefore people began either using foreign currencies to get what they needed, or resorting to barter. So, for example, one lady exchanged a beautiful piano for a sack of wheat flour. Another sold a gold watch for 4 sacks of potatoes, which would carry them through the winter. Indeed, food was so valuable, the price of food had gone up much faster than the price of clothing. And things had got so bad that tradesmen would refuse to sell their wares for the local currency and instead demanded something of real value in exchange. So having to queue for basic essentials did take its toll in terms of productivity. So for example, a housewife couldn't spend time cleaning her house and looking after the children if she had to stand for 5 hours just to buy a loaf of bread. And even if she queued for that long, she might not even be able to get the bread at the end of all that. Also, the amounts that were required to carry in terms of the local currency just became ridiculous. And you know, people would have to go around with suitcases or even wheelbarrows just to carry the stuff just to buy daily essentials. Indeed, thieves actually stole the carriers, such as suitcases or wheelbarrows, and actually just left the money on the ground. That just shows just how worthless the local currency had become. So as prices continued to increase, the public just kept demanding more and more of the local currency to be created to enable them to buy what they needed. However, there were no cries to the government to maintain the purchasing power of what they had. And the underlying problem there was that people just didn't understand what inflation was and what caused it. As a result of all this hardship, the public were looking for someone to blame. So they'd blame other classes, other races, different types of politicians. They blamed other countries. They blamed tourists, farmers, profiteers and speculators. But actually they didn't blame the one thing that was causing all of the problems. So the government wanted to be seen publicly to be dealing with profiteering. So they actually submitted a bill to make gluttony an offence. At the time, gluttony was defined as one who habitually devotes himself to the pleasures of the table to such a degree that it might cause discomfort. And this was punishable by imprisonment and or a fine. Caterers who abetted in gluttony were also punished and risked conviction, and foreigners who indulged in gluttony would be deported. However, that bill was never actually enacted in the end. And one of the really sad effects of inflation, hyperinflation, was that it brought out the worst in people. So jealousy and envy flourished, and if you were able to procure a harmless article of food, for instance, then you'd have to be very careful to conceal that from your fellow man. That's very different from current times where things like conspicuous consumption and keeping up with the Joneses seems to be order of the day. Things were very different when inflation and hyperinflation occurs. At that time, the good neighbour atmosphere had completely disappeared and everyone saw an enemy in everyone else. If you went out in the winter wearing a nice warm cosy coat, you could be mugged for that coat. And hordes of townspeople at a time would go to the countryside to steal whatever they could for their survival. So the features that were coming out at the time were that bribery and corruption became increasingly common. There was a communal hatred, social resentment. There was a sliding away of morals. People were increasingly willing to break the rules in order to survive, and there was a lack of consideration for fellow man. The instinct was of self-preservation, and men's values basically turned into animal values. Those are the real horrors of hyperinflation. Let's hope that none of us have to experience that, but I have to say the signs are concerning. Next up, the market update. So let's start by looking at gold in US dollars on the weekly scale. Now you'll see that I've changed my lines compared to previously. Previously I had a parallel channel drawn, but I do think it's important to adjust your approach as new information comes to light. And so what I've done here is joined these highs and joined these lows, and we've got this slightly broadening channel instead, which seems to fit much better. And I've also drawn a line in the middle of that channel that seems to be a point of resistance and support along the way. So where are we now? Well, when we looked at this chart on the monthly scale last week, we did talk about how 1800 was going to be significant resistance. And we also talked about the possibility that we're forming a cup and handle, and discussed whether the handle was going to occur or not. Looking at the way price has progressed recently, I'm starting to think that the handle is likely to form. Part of the reason is that we had this triangle pattern here, which actually ended up failing to reach its target, which the target was just around the 1800 mark. So instead, although we had a breakout, we just had multiple retests of the top of that triangle, and then last week it actually failed. And we made a lower low over here. We are therefore in a short-term downtrend. This is more obvious if you look at it on the daily scale. So the question is, where are we going to go from here? Now, I'm not expecting anything catastrophic. I'm very doubtful we're going to be breaking this lower channel line, just because it feels like we're in a bull market. We have continued to make higher highs and higher lows, and so while that trend is in place, we must assume that that's going to continue unless we see evidence to the contrary. As far as what this potential handle pattern is going to look like, it's still pretty early days at the moment, but having drawn these lines, this gives us a few indications. So the first thing to note is that we do have pretty strong support at around the 1550 price level, and that actually even goes back, if you look 7 years back, there's particularly strong support over there. Then we've also got support on this middle channel line here, so just around say 1620 US dollars there. So there's a few possibilities in terms of where we go from here. As I mentioned last week, handles can form in a variety of patterns, but we're really looking for the bullish ones that are going to break out upwards and help us reach those all-time highs. And so those kinds of patterns would be either a channel formation with an upwards breakout. So if that was to occur, then we'd be looking at perhaps joining these two highs over here and extending it downwards and see what happens there. But again, it's too early to say where the lows of that are. Another possibility is like what we had here, which was a descending wedge pattern. We also had the same thing here. So with a descending wedge, we would see price get narrower and narrower and then break out upwards, and those can be quite powerful patterns. The other possibility is if we form perhaps a triangle here, so perhaps price may go just between this range over here before moving upwards. So it really depends whether the center of this channel line holds as support. What's the lowest that we can go? I think the highest probability is that we'll get support at around the 1620 level. The next likely is support at this lower channel line here, so we're talking at around the 1530 level. If we go below that, I'll be very surprised. I think it's a low probability, but remember, it's not impossible. We don't know what's going to happen. I know as much as you do. This is just speculation. It's also interesting to look at what gold is doing in foreign currencies. And again, we're seeing this broadening ascending channel pattern. So this is gold in Japanese yen on the weekly scale. And this looks slightly different from the US dollar chart. We can see that there's a lot more volatility, and the gold price seems to be holding up pretty well in the upper end of this channel. But of course, remember that this is all because of fiat currency valuations relative to the US dollar. So the Japanese yen has recently been weak relative to the US dollar. And so this may well stay in the up half of this channel. If we get increased strength in the Japanese yen, then that could bring it to the lower end of this channel. Another foreign currency is the New Zealand dollar, and this channel seems narrower than the other ones, and we're actually already in the lower half of this channel. And this is because the New Zealand dollar was recently quite strong. Whether that continues remains to be seen. This chart would suggest that if gold in US dollars was to drop, then it may mean that we're going to get weakness in New Zealand dollar, which is going to limit the New Zealand dollar gold price drop. So it'll be interesting to see if this bottom half of the channel holds for this currency. Let's move on to silver in US dollars on the weekly scale. And we drew this channel quite some time ago, and this has held up pretty nicely. Again, I've drawn a line in the middle of the channel, which seems to have provided some support and resistance over the years. And you can see that we're currently at around the $18 level, and that has been resistance for quite some time. You can see a number of hits here where it just hasn't been able to go through there, and I think we're at that point again at the moment. So where do we go from here? Can we reach the bottom of this channel again? Well, that's not impossible, but remember that we've got this long-term upwards trend line which has been supportive in the past and may yet remain supportive in the future, particularly because we've got this confluence here where we've got the middle of the channel line and that red trend line there. So that makes me think that $15 may well provide strong support. If that breaks, then yes, the bottom of this channel is up as an option. But I think this point is going to be very important coming from here. I think if we get above that $19 level, there's a lot of empty space up there with very little resistance, and so any break of 19, I think it's about 19.20, that's going to shoot up to the next resistance level, which is around $28. So what could happen here? Of course, there's all kinds of possibilities, nobody knows, but I suspect in the coming weeks, similar to gold, if it follows what gold does, we're possibly going to get some kind of bullish consolidation here, which may well propel it upwards. If we look more closely at silver in US dollars on the daily scale, we've got this rising channel here, and I've just drawn that by connecting the highs and the lows. And remember that around the 1750, 1800 kind of level is resistance. And what we're looking for here, if we get a break of just below 17, so that's this lower channel line here, then I think that possibly we're going to drop down to around the $15 level, and that's where that confluence of support remains. And certainly it was reasonable support back in the last couple of months, and possibly get a bounce from there. If we go upwards from here, then we're looking for a break as I said before, above 1920. That seems a bit unlikely at this stage. I think we do need a bit more work to consolidate. The other possibility is that that consolidation occurs within this channel region, which again would be pretty bullish, and then that could propel things upwards. But I still think we've got a bit of waiting around, so probably I'm not expecting any massive moves in the next coming weeks. And looking at GDX, so remember this black line was a 7-year resistance line. We sliced through that pretty well a few weeks ago, but that didn't really hold up. And remember that I said that I was a bit nervous about that move and the way that move occurred, and certainly the price turned over at this point, and we've reached back at that resistance, which seems to have possibly formed support. Price dropped through there, but then bounced back up and closed at just around the 32 mark, which is a very important point here. And this is really crunch time for the GDX. Now, one possibility is that this holds and price moves up, in which case that's great news, and that's going to be very bullish, and I think we're going to make new highs if that occurs. However, if we break and close below that 32 level, then I think we've got more downwards movements to come. And particularly from what we've discussed about gold and silver, thinking about some consolidation coming up, that would make me lean more towards this downwards movements. And again, I mentioned that there's multiple gaps that would want to be filled. I don't think it's going to be a devastating drop. How far it drops, nobody really knows. Certainly, there are a few possibilities. So I think getting to 26 is a high probability, just because that's just below the last gap that we saw there. If we go any lower than that, the next area of support will be at around the 23 level. Anything below that, we're going into the lower half of that channel, which I showed last week on the monthly scale, and that's rock bottom bargain territory at that point. But I don't know if it will go that low. So it's just going to be a matter of watching the price action and see how things progress. That's it from me for this week. See you next week. All the best. Bye.